Level 1. Trading Intern. You enter the training room with the visitor badge clipped high. You face the whiteboard covered in option payoff diagrams. Under the stopwatch, you solve probability drills beside the intern line. You erase a crooked payoff diagram before the timer ends. You read the printed futures contract specification sheet at chest height. With the stopwatch running, you calculate tick value against the contract sheet. You write the answer under a senior trader's silent stare. You mark your mock trading score sheet after a bad quote. At the whiteboard, you circle the red mark beside your missed probability. You carry the notebook to the back row of the trading floor. You stop behind the senior trader without touching the desk. From the back row, you copy trade terminology into the notebook. You keep the visitor badge visible against your shirt. You watch the P&L columns move tick by tick. Beside the desk seating chart, you read the blank space under your name. You step away from the senior trader's muted headset. You lower your question when the senior trader leans toward a price. In the desk pod aisle, you hold the notebook closed against your ribs. You follow the senior trader's hand signal to a safer distance. You study the order rhythm from behind the chair line. At the edge of the desk pod aisle, you write only after the trade passes. You return to the training room with the contract sheet folded. You compare the contract sheet against the payoff diagrams again. After the mock market round, you mark your score sheet in red. You carry the red-marked score sheet into an empty conference room. You replay the mock market mistake on the whiteboard. Alone after hours, you draw the payoff diagram without the stopwatch. You press the notebook flat under the conference room light. You rewrite the trade terminology until the words stop sounding heroic. At the conference room table, you read the red marks without defending yourself. You walk back to the desk pod aisle with the notebook open. You stand behind the senior trader's muted headset again. Near the senior trader's chair, you keep both hands away from the keyboard. You touch the visitor badge and understand your seat has not been earned. You place the mock trading score sheet beneath the seating chart. At the back row of the trading floor, you close the notebook slowly. You keep the visitor badge clipped to your shirt. You stand with the notebook against your chest in the desk pod aisle. Level 2. Desk Assistant. You arrive at the operations corner beside the trading floor. You open the trade blotter with one mismatched fill highlighted. Against the broker confirmation email, you check the timestamp line. You compare the fill price against the broker confirmation. You mark the reconciliation spreadsheet where yellow warning cells cluster. Beside the worn keyboard, you update positions without adding opinion. You print the morning market note packet with crooked staples. You carry the note packet into the morning meeting room. At the meeting room table, you place the notes before the senior trader. You listen while the senior trader uses your market note. You keep your opinion behind the printed packet. Across the table, you track which page the senior trader touches. You return to the shared desk beside the main traders. You refresh the economic calendar taped beside your monitor. With worn function keys, you update the sheet before the open. You read the instant message window asking about correct positions. You check the position line against the trade blotter. At the shared desk, you circle the mismatched fill in yellow. You carry the broker confirmation printout to the operations corner. You reconcile the fill again before admitting the discrepancy. Inside the operations corner, you keep the correction form under your palm. You step into the quiet hallway outside risk control. You hold the crumpled correction form at waist level. Outside risk control, you wait with the highlighted blotter open. You read the timestamp on the broker confirmation once more. You press the correction form flat in the quiet hallway. Before the risk control door, you rehearse the booking discrepancy plainly. You submit the correction form outside risk control. You keep the trade blotter open for the risk manager. In the quiet hallway, you point to the yellow warning cell. You retrieve the marked form after the risk manager's check. You return to the shared desk with the corrected fill. Beside stale coffee and cables, you update the reconciliation spreadsheet. You confirm cleared yellow warning cells after the correction. You hold the blotter and understand tiny lies become trading risk. At the operations corner, You log the corrected fill under the timestamp. You fold the broker confirmation email around the correction form. You keep the crumpled correction form in your hand outside risk control. Outside risk control, you hold the trade blotter against your chest. Level 3. Junior Trader. You sit at the small terminal at the desk edge. You open the order entry ticket with small contract size. On the terminal screen, you read your first live orders. You place the headset with one ear cup lifted. You wait for the senior trader's approval before touching the order key. Beside the monitor, you set the sticky note with the stop instruction. You send the small order after the senior trader nods. You read a minor loss on the P&L screen. At the small terminal, you keep the stop instruction above the keyboard. You cut the position at the senior trader's stop. You record the exit on the printed chart in pen. Under the chart marks, you write entry and exit without excuses. You enter the risk meeting room with the post-trade review document. You place the post-trade review document before the senior trader. Across the risk meeting table, you point to the late exit circle. You read the loss line aloud from the review document. You keep your hands away from the stress ball. In the risk meeting room, you answer only from the trade record. You return to the trading floor during the fast market. You hover one finger above the keyboard. Before the keyboard, you read the red rejected order notification. You pull your hand back from the rejected order. You check the sticky note with the stop instruction again. On the trading floor, you breathe through the headset with one ear cup lifted. You reduce the next order to the approved size. You accept the senior trader's silence after the fill. At the desk edge, you mark the printed chart with the new exit. You carry the phone into the break room after the close. You read the P&L number on the phone screen. In the break room, you turn the phone face down. You squeeze the flattened stress ball once. You place the stress ball beside the phone. At the break room counter, you open the post-trade review document again. You circle the late exit for the break room review. You hold the review document and accept behavior matters more than thesis. On the phone, you leave the P&L screen untouched. In the break room, you keep the phone face down. You carry the post-trade review document back to the small terminal. You leave the post-trade review document beside the small terminal. Level 4. Risk Limited Trader. You return to the trading desk with a tighter rule card. You pin the daily loss limit dashboard larger than the price chart. Beside the monitor, you tape the personal risk checklist below the screen. You read the orange warning band before reading price. You compare the position cap table against the order ticket. At the trading desk, you shrink the order ticket before submission. You stop at the flashing volatility alert on the side monitor. You leave the reduced size order ticket waiting unsubmitted. With the rule card visible, you move away from the keyboard. You enter the compliance room with the firm policy binder. You open the firm policy binder to limit breach rules. Across the compliance table, you trace the breach procedure line. You listen while the risk manager explains the cut procedure. You keep the binder open under your hand. In the compliance room, you read the rule card saying no recovery trade. You carry the reduced size order ticket to the quiet stairwell. You stand on the stairwell landing until the market impulse passes. Against the stairwell rail, you read the personal risk checklist. You cancel the tempting trade before returning to the desk. You print the canceled trade confirmation after the order clears. At the trading desk, you place the confirmation beside the dashboard. You resume only after checking the orange warning band below your cutoff. You record the canceled trade in the end-of-day review packet. At the end-of-day review table, you present the canceled confirmation. You explain the smaller order from the position cap table. You keep the daily loss limit dashboard printout facing the risk manager. Across the review table, you point to the personal risk checklist. You compare the canceled trade confirmation with the unsubmitted ticket. You notice restraint now appears as a performance mark. At the review table, you hold the rule card without hiding the loss. You close the firm policy binder after the risk manager finishes. You return the position cap table beside your monitor. Under the screen, you tape the rule card straighter than before. You hold the canceled trade confirmation and understand risk limits shape the game. You leave the reduced size order ticket unsubmitted beside the keyboard. At the end of day review table, you place the canceled trade confirmation flat. You keep the personal risk checklist under the screen. You stand with the canceled confirmation on the end of day review table. Level 5. Strategy Owner. You enter the research pod with the strategy playbook binder. You open the binder to annotated examples of your setup. At the research pod screen, you test the setup against old market sessions. You read the backtest report by market regime. You mark the slippage tracker where execution costs widen. Beside the heat map, you sort the trade journal into valid setups. You separate invalid setups without defending the profitable accidents. You circle a lucky streak on the printed equity curve. Over the printed equity curve, you pause before calling the setup an edge. You carry the presentation deck into the senior trader's office. You place the capital increase approval deck on the desk. Across the office desk, you defend the strategy from the trade journal. You read expectancy from the backtest report. You show the slippage tracker before asking for scale. In the senior trader's office, you keep the lucky streak circle visible. You accept the smaller capital approval without arguing. You return to the trading floor during the preferred market window. At the trading floor seat, you arrange every screen around the setup. You open the order ticket only when the playbook conditions align. You compare the heat map of index futures and volatility products. During the preferred window, you hold the playbook beside the keyboard. You pass on the trade outside the valid setup column. You record the missed temptation in the trade journal. With the trade journal open, you notice attachment hiding inside discipline. You trade the setup at approved size during the window. You mark execution cost in the slippage tracker after the fill. At the trading floor seat, you compare the fill with the playbook example. You carry the binder to the late-night desk. You place the old screenshot of the first belief trade beside the journal. Under the late-night screen, you compare winners with invalid trades. You cross out a profitable trade from the valid setup list. You read the backtest report again by market regime. At the late-night desk, you fold the equity curve behind the playbook. You pause over the circled lucky streak and realize ownership can become attachment. You close the strategy playbook binder before leaving the screen. Beside the old screenshot, you set the presentation deck under the binder. You accept capital demands proof, not belief, with the binder closed. At the late-night desk, you keep the trade journal open to invalid setups. You leave the strategy playbook binder beside the old screenshot. You stand with the strategy playbook binder on the late-night desk. Level 6. Drawdown Survivor. You enter the nearly empty trading desk after the capital cut. You read the new limit number on the capital reduction notice. On the smaller screens, you set the shrinking position sheet in view. You open the drawdown chart with the ugly slope. You trace the slope without blaming market regime. Beside the untouched coffee cup, you reduce the next order size. You stop before the revenge entry appears on the ticket. You mark revenge entries in the printed trade log. At the nearly empty desk, you keep the capital reduction notice beside the keyboard. You enter the conference room post-mortem with the red-lined packet. You place the loss report before the risk manager. Across the projected chart, you point to each bad decision. You face the risk manager's tapping pen beside the loss report. You answer from the red-lined post-mortem packet. In the conference room post-mortem, you circle the broken rule instead of the market excuse. You carry the printed trade log into the archive room. You study old trades without seeking praise. At the archive room table, you mark market regimes beside valid setups. You compare the drawdown chart against the trade log. You remove the revenge entries from the rebuild plan. Inside the quiet side office, you keep the View Only screen in sight. You read View Only on the product screen you once traded. You set the coffee cup untouched beside the shrinking position sheet. Under the side office light, you delete the forced comeback order. You print the deleted order ticket before market open. You walk to the sidelines for the market open. From the sidelines, you watch the opportunity trade print on a different terminal. You hold the deleted order ticket instead of chasing the move. Beside the market open sideline, you read the new limit number again. You shrink your plan to the capital reduction notice. You accept the smaller route without asking for sympathy. At the sideline screen, you review the redlined packet once more. You mark the trade log where patience protected the remaining limit. You hold the deleted order ticket and understand survival has become your position. At the market open sideline, you keep the view-only product screen outside your hands. At the market open sideline, you fold the capital reduction notice. You place the deleted order ticket over the revenge entry marks. You hold the shrinking position sheet against your chest. At the market open sideline, you keep the deleted order ticket in your palm. Level 7. Senior Trader. You take the central desk seat with juniors around the screens. You open the larger position blotter across several product lines. Behind the central desk, you place the multi-asset exposure dashboard in full view. You scan clustered risk before checking your own trade. You mark the market event calendar with the boxed announcement. At the central desk seat, you correct the junior trader's notebook margin. You hand the notebook back to the junior trader. You review the execution quality report across venues. Beside the larger blotter, you compare fills against the report. You walk to the quant research area with the exposure printout. You argue model behavior during volatility spikes from the circled row. Across the quant research table, you keep the dashboard page open. You point to the cluster rather than the winning trade. You carry the model question to the developer station. At the developer station, you open the bug ticket for the pricing tool. You test the tool update before the next market open. You compare the broken pricing output with the execution report. Beside the developer station, you mark the bug ticket with the failed condition. You return to the central desk seat before the event window. You read the shared desk chat filled with nervous confirmations. At the central desk, you call the juniors into a desk-wide huddle. You place the correlation matrix in front of the group. You circle the row matching the event calendar. Inside the desk-wide huddle, you ask each trader for exposure in plain terms. You map the supposedly different trades onto the correlation matrix. You cut a product line from the larger position blotter. At the desk-wide huddle, you point the juniors back to the exposure dashboard. You approve only the fills with clean execution quality. You stop the desk from adding to the clustered outcome. Near the boxed announcement, you mark the calendar with a smaller size plan. You keep the junior trader's notebook open to your margin corrections. You lower your own order before speaking to the group. At the central desk seat, you read the dashboard from behind the risk screens. You understand a senior book can fail through hidden correlation. You trace the circled row on the correlation matrix. Beside the market event calendar, you set the larger position blotter aside. You choose desk survival over personal proof with the correlation matrix under your hand. At the desk-wide huddle, you hold the correlation matrix beside the boxed event calendar. You stand with the correlation matrix facing the central desk. Level 8. Desk Risk Lead. You enter the risk control room before the trading floor opens. You rank trader names by risk usage on the exposure monitor. Across the wall monitors, you compare exposures against the stress test printout. You mark the trader performance dossier for repeated rule exceptions. You keep the capital cut email drafted but unsent. At the exposure monitor, you separate bad luck from unsafe behavior. You carry the limit approval form into the glass meeting room. You place the form before the trader asking for more size. In the glass meeting room, you let silence hold before the answer. You read the stress test printout under the trader's request. You ask the trader to match size to the shock scenario. Across the glass table, you keep the red risk override stamp out of reach. You deny the size increase on the limit approval form. You return to the trading floor during the forced limit cut. At the trader's seat, You hold the exposure monitor page beside the keyboard. You cut the limit while the trader argues from the chair. You read the capital cut email draft before sending. Beside the trader's screens, you compare the dossier with the voice recording transcript. You send the capital cut email after the argument repeats. You carry the trader performance dossier into the post-mortem session. At the post-mortem table, you draw unlucky on one side of the whiteboard. You write unsafe on the opposite side of the whiteboard. You place repeated rule exceptions under unsafe. Across the post-mortem table, you hold the voice transcript against the dossier. You ask the risk manager to verify the exception pattern. You keep the trader in the room with the stress test page. Beside the whiteboard, you review the forced cut without softening the result. You press the red risk override stamp onto the final limit page. You file the stamped page with the performance dossier. At the risk control room, you recheck exposure after the cut. You compare the new ranking against the wall monitors. You leave the unused approval space blank. Before the post-mortem closes, you hold the capital cut email open. You understand loyalty cannot outrun unsafe behavior. You keep the stress test printout between the trader and the limit form. At the post-mortem table, you return the red risk override stamp to the dossier. You close the trader performance dossier after the final exception line. Beside the stamped limit page, you place the capital cut email. You stand with the trader performance dossier on the post-mortem table. Level 9. Portfolio Risk Principle. You enter the executive risk room with the capital allocation map. You place the map across trader, strategy, and asset class columns. At the executive risk table, you read firm-wide exposure from the screens. You compare the tail exposure report with the stress test dashboard. You mark scenario losses highlighted in the report. Beside the capital allocation map, you leave one capital line unused. You listen to senior partners through the boardroom speakerphone. You answer with the liquidity report rather than personal conviction. Across the executive risk table, you trace what can actually be exited under pressure. You pull capital from the decaying strategy review folder. You redirect scale toward the cleanest, repeatable edge. With the review folder open, you flag the strategy for capital reduction. You cross to the private office with firm-wide exposure screens. You replace personal trade charts with the stress test dashboard. Inside the private office, you compare trader books instead of single entries. You read the liquidity report during a shock scenario. You mark correlated exits on the capital allocation map. On the private office desk, you keep unused capital separate from fear. You carry the new product approval packet into the approval meeting. You place unresolved questions flagged in the packet at the center. At the approval meeting table, you angle the packet toward the legal lead. You ask the quant lead to defend model behavior under stress. You require the trading lead to match liquidity to proposed size. With the packet open, you approve only the questions already answered. You keep the boardroom speakerphone unmuted for senior partners. You move the unresolved questions back to the packet front. Across the approval meeting table, you leave the product unscaled. You return to the executive risk room with the updated map. You compare capital allocation against the firm-wide stress test dashboard. At the executive risk table, you hold the tail report beside the blank line. You choose the blank line over forced deployment. You walk onto the dark trading floor after the close. After the close, you review whether the firm survived intelligently. You read the unused capital line on the report without filling the space. You understand capital means accountability, not freedom. Beside the dark trading floor desk, you place the decaying strategy review folder closed. You leave the unused capital line blank and accept restraint as risk culture. Beside the firm-wide stress test dashboard, you set the capital allocation map. You stand with the unused capital line report on the dark trading floor desk.